Welcome to The Interest. I'm Sarah Wolak. Let's look to see what the market has in store for us next in David Luna's Smashing the Crystal Ball. Then you can sit back and relax to some poetry from our own Vincent Valvo. And as we approach Veterans Day, it's important to highlight those standout lenders and originators making a difference in the lives of veterans and their families. That's exactly what we did in the November edition of NMP Magazine. Our featured lenders include Academy Mortgage Corporation, Fairway Independent Mortgage Corporation, PennyMac, and Supreme Lending. Each of these lenders is dedicated to serving the military community through various programs, support for veterans, and contributions to charitable organizations that assist military personnel and their families. To read more about our honorees, go to nmpmag.com. While we salute those who have served, we also are extending a message of appreciation to those helping and supporting these military heroes. Meanwhile, our own Katie Jensen says that there's a new girl in town. California-based Tiffany Dawson, who's producing more volume than her more experienced peers, tells us how she did it.
It's hard not to envy those who achieve success quickly, but no one can say Tiffany Dawson doesn't deserve it. Dawson, age 36, became an originator at the start of 2022 with no experience in the mortgage industry. After completing 24 loans in her first year, she was promoted to senior loan officer for New Leaf Funding.
And I shocked a lot of folks in my brokerage. Some of them had to apologize because they definitely pumped some negative thoughts in my mind at the very beginning when I told them what my goal was for the year.
Dawson's goal was to make 6 figures in her first year, and her colleagues thought she was being naive. Turns out Dawson would surpass most of them that year.
Folks in my office, they started coming up to me like, hey, what are you doing now? What's going on? What do I need to do? How can I change? How can I get this business that you have?
Dawson gathered most of her knowledge on real estate as a young investor. Buying her first condo at 22 years old, she knows how hard it can be getting started.
I used to cry about it. I didn't think it was possible. I would talk to a lot of homeowners, whether they were in my family or in my business circle. We used the FHA loan to get our first property, which then in turn became an investment property, right?
Her primary demographic of borrowers are first-time buyers, usually in their 20s, many of whom are looking to house hack their first property.
A lot of them don't have a ton of money coming into it. They're typically going to be your 3 or 3.5% down. I've had a couple no money down. Credit has been, all over the spectrum. I've had the low end, the high end, but they're not trust fund babies or anything like that.
Now she not only helps other young investors get started, but she also tries to save them from scammers disguised as real estate coaches.
I was just on an investor call last week. This lady wanted $30,000 from people to help them become an investor. And I was like, that's crazy. They didn't have money. They were trying to figure it out. And she recommended business funding for them to be able to pay her so she could tell them how to do it.
To read more about Dawson's rapid rise to success, check out California Broker Magazine at nationalmortgageprofessional.com. For The Interest, I'm Katie Jensen.
Angel AI is revolutionizing the home financing process. Here to tell us about it is Pavan Agarwal, the CEO of Celigence, the company behind this new amazing app. Tell us how Angel AI is helping the home financing process.
We use empathetic AI technology, so Angel AI understands the emotions behind human inputs so that the application to approval to close of a mortgage is nearly free of human touch and free of human error and is lightning fast compared to the manual standards of the real estate industry today.
What about the people who have found it hard to get a mortgage?
Angel AI has made the approval process for mortgages fair and transparent, such that we have cut the decline rates for minority communities by half relative to the national average. Just go to angelai.com or click the Ask Angel AI Now button and ask Angel AI your home finance questions, or simply ask her to send you one of these cool free t-shirts. Angel AI has transferred the home financing business and made it fairer and easier for everyone.
This is David Luna for The Interest. After the Fed announcement November 1st to keep the Fed funds rate the same, this has caused, at the time of recording, that the U.S. 10-year Treasury yield to fall. I've been watching it for the last few days. It has gone down from 4.8, 4.7, 4.6, 4.5. Will it continue to fall is unknown. Is the Federal Reserve done hiking interest rates? It's unknown. And when I say interest rate, it's not interest rate, it's the Fed funds rate, right? But it does have a circuitous effect on rates. This is where speculation comes into the marketplace. We can make educated guesses, but no one really knows. Therefore, in my opinion, I think based on all that I'm seeing and reading, yes, I think the Federal Reserve is done raising rates. Now, could there be some data that surprises everyone? Of course. But the trend is what I've been watching. Let me give you some idea of what I think that the Feds are done raising rates. For example, let's look at CPI, the Consumer Price Index. It was at 8% last fall, 7% last year over the holidays, 6% in early 2023, and it has continued to fall and is now at 3.7%. That is a trend that tells me the Fed's actions are working. Next, let's look at the Fed's favorite indicator, the PCE, personal consumption expenditures. PCE has basically been trending downward all year. In January, 0.5, February, 0.4, April, 0.3, August, 0.1 before it went up slightly, but still below what we saw at the beginning of the year. The indicators show a slowing, but some are higher than what the Fed would like. Therefore, the language we heard on November 1 is still hawkish. The jobs report showed jobs cooling in October to only 155,000. This was a huge drop from previous months. This also caused the unemployment rate to tick up to 3.9%. We are seeing the efforts of the Feds and their increasing of the Fed funds rate work. Inflation is dropping, but even the Fed is saying we won't hit that target 2% until 2025. We may be at 2.3% in 2024. What does this mean for mortgage rates? It means that we are probably nearing the end of extremely high rates, all of the rate increases. Things do not look for me like they're going to turn around in 2023. But the first half of 2024 looks really good, with 2025 looking even better. This is David Luna for The Interest.
In retirement's golden phase, some folks seek a clever embrace. Reverse mortgages gleam, unlocking home's dream, but caution's a wisdom to chase.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.